Hey there, welcome back to the channel. My name is Jim Hart. I am the owner of the Hart Law Firm. I also run an online legal template store called One Stop Legal. And today we're going to be talking about some of the common questions that I get from people on this channel. Specifically, I'm basically going to be going through some of the, I've picked some questions that I think are especially appropriate and helpful, and where I think that my advice here is going to, hopefully help you get the information you need moving forward. And so I picked out some questions. We've got some questions about trade secrets. We've got some questions about when to form an LLC. We've got questions about what to do if you're a consultant and thinking about forming an LLC, how to open a business bank account, and then we're also going to be talking about what state you should be forming your LLC in. So we've got kind of a grab bag of a number of different legal topics here, and I think this is going to be really helpful. So let's go ahead and just jump to it. Now remember, before I get to any of these, that none of this information is construed or should be construed as legal advice. I'm not your lawyer unless you hire me to be your lawyer, and usually that involves an engagement agreement as well as some money that would be coming my way. So if you haven't paid me money and you hadn't signed a contract, I'm not your lawyer, so don't take this as legal advice. If you do have questions and you don't want to hire me, that's fine. Go talk to a lawyer where you live and hopefully they can help you. So I'm going to go ahead, put on my reading glasses here. So first question, what actions can be taken against infringement of trade secrets if they were breached by a non-employee, i.e. someone you don't have a contract with? So a couple things here that really stand out about this question. Number one, this just shows the importance of having a contract if you are going to be working with somebody and perhaps I was just talking to somebody about this last week, I believe, where this individual had developed a business idea and wanted to go to his employer about it because this business idea, it was a software application that was going to directly benefit his employer. But he was worried that if he takes this idea to his employer, that his employer is going to basically say, okay, that's our idea. We'll hire somebody to develop that software, great idea, but we're going to hire somebody to do it. And then they're going to steal that idea from him. And that's not what he wants. So I don't know what happened in this particular situation, but the question is what actions can be taken against infringement. I think the question you really need to be asking or thinking about here is, why was there not a contract in place? So in my example of this person that's taking an idea to his employer, it's really important that you have a non-disclosure agreement in place with that employer that basically says, this is my idea and you can't steal it and you're not going to share this with anybody else, something like that. And that's typically the way a non-disclosure agreement works. I think it's really important anytime you're getting into a situation where maybe you're going to be selling your business and somebody wants to come in and look at what you're doing, or potentially, you've got a new business idea that you want to share with other people or other things like that, or you want to bring somebody into your team and you're going to be sharing with them some of the things that you do with your business. It's always important to have a contract in place. And if you don't have a contract in place, which it sounds like this individual says they did not have a contract, or at least they say it was breached by a non-employee. So I'm not sure who this third party is, whether it's a vendor, whether it's somebody that they hired as a consultant, whether it's somebody else that they have direct relationship, but they say someone you don't have. Okay, so they didn't say contact, they said you don't have a contract with. So just to make sure that's clear, it's important to have those in place. Now if you don't have a contract in place and you share information with somebody and they're not legally prohibited from doing something with that information, then that's going to be a problem. And so I do recommend that you have contracts in place anytime you're sharing sensitive information, especially, like I said, a non-disclosure agreement. Now, in this case, this person does not have a contract with the individual that's quote unquote infringing. In that situation, you can send them a cease and desist letter. You can threaten to sue them. You can actually sue them potentially. Although whether or not you're going to get any traction with that is really going to depend on, what state you live in, what the laws are there, and how they treat these type of situations. Some states, you might be protected. Other states may say, no, you need to have a contract or there's nothing you can do. So just important to be thinking about that. This is one example of why it's so important to have these non-disclosure agreements in place. And again, I'll include a link down in the description to my online legal template store at One Stop Legal. So that's question number one. Question number two, if I am starting a store, can I just start selling things and then form an LLC later down the road if I need to? In other words, waiting until I generate profit and see about it once I get going. I have talked about this issue on a number of different videos, and my general advice is, if you're going into business, doesn't matter what type of business it is, there are strong reasons to start an LLC or some other type of business entity, maybe a corporation, as soon as you possibly can. Now, there's going to be exceptions. There's certain states that make it really expensive, like Massachusetts, the filing fee I think is like $500. California, the filing fee is deceptively small. I believe it's $75, but 4 months after you file your LLC, you have to pay a franchise tax of like $700 or $800, and you have to do that every single year you're in business. So some states make it very difficult. Other states, the filing fees are like $50 and there's no annual reporting requirement. So it really depends on where you live. If money is tight and you really need to be showing a profit before you are, can justify spending more money on this business, and you live in a state like California, then I probably would say, maybe you should hold off. But if you live in one of those states where it's really inexpensive to start an LLC, for example, here in North Carolina, you can do one for, I think the filing fee is $125, and then you get your articles of organization, you set up your business bank account, you get your EIN number, you do all those things, you're good to go. But in other states, like I said, if it's more expensive, you may want to hold off. Back to the question. I'm starting a store, not sure what type of store. Can I just start selling things and then form an LLC later down the road? Yes, you can. Do I recommend it? Not necessarily. It really depends on the state you live in, but there you go. All right, next question here. I'm a search consultant, i.e. a recruiter, excuse me. This is a long question, so let's just get through it. I work with pretty much one company who pays me commissions via 1099 for job filing openings that they need help with. I formed an LLC because I thought I needed to get paid a 1099, but I'm realizing now that I probably didn't need to, and that's correct. If you're just getting paid 1099 from a company as opposed to as an employer, as an employee, a W-2, then yeah, you probably don't need an LLC because your income is going to be fairly steady. But anyway, so let's see what else he or she says. And could just be a sole proprietor. I also live in the state of Tennessee where there is no income tax for W-2 employees, but I have to pay franchise and excise tax because I formed the LLC. Okay, now mind you, these franchise taxes are usually pretty small for a single member LLC, a couple $100. So, I mean, yeah, there's no income tax for W-2 employees, but you do have to pay what's called self-employment tax at the federal level, but there's no state income tax. There is federal income tax, but no state income tax in Tennessee. I was planning to submit a 2553 so I can file as an S-Corp to have a lower tax rate burden. Again, not sure that's going to work for you in this situation. I would definitely talk to an accountant about this. And the reason for that is that your only income is the income you're getting from commissions. And since you're the only person who is working in this business, then an S-Corp may or may not work for what you are actually doing. Because the whole idea of an S-Corp is you need to pay yourself a reasonable salary, and a reasonable salary is what you would pay somebody to do the job that you're doing, which is exactly what you're getting paid as a 1099. So I'm not sure an S-Corp is going to help you. Again, talk to a tax accountant. However, the state, federal, and F&E tax, I'm not sure what F&E tax is 0.25%, again, pretty small, and 6.5%, which is a little bit bigger. My dilemma is that I'm not sure if it makes sense to pay the cost of the LLC and go through the effort of what's needed in order to be able to file as an S-Corp to get into a lower tax bracket, but then be on the hook for the state F&E tax, rather than be a sole proprietor and avoid the cost and extra work of an LLC filing S-Corp. I'd have a higher federal tax rate, but no state, or the cost and extra work of the LLC. Again, I'm starting to lose what the question is here, but I feel like after I write off my expenses, there wouldn't be a very noticeable difference in my net take home at this end. I work from home, make about $120,000 per year from recruiting, have almost no risk of being sued. Okay, so I mean, yeah, in your situation, I probably would say you do not need to go through all that effort of filing an LLC. The tax rate for a single filer, assuming this person is a single filer, the tax rate jumps from 12%, the marginal tax rate for a single filer in 2025 jumps from 12% to 22% at around $50,000 of income, $48,475. So yeah, you're going to pay a little bit more. However, if you're making about 120, some of that's going to be knocked off with the standard deduction. I mean, yeah, for what you're doing, I don't know that it makes sense to have an LLC and an S corp unless you're taking on other jobs that are also paying you 1099 and you do have a lot of expenses related to the business. I'm not sure it makes sense, because here's what happens. When you get that 1099, you can enter that as business income on Schedule C of your tax return, and you can also write off your expenses there. So it's basically the same thing. You're still getting income via 1099, and you're writing off your business expenses, which is the same thing you do with an LLC. And there's, unless you have that S corp status, you're still with your LLC, your default tax rate is as a sole proprietor, which is basically what you are right now if you don't have the LLC. So in this situation, unless you're forming the S corp for what you're doing, it probably doesn't make sense. And again, I'm not sure an S corp will work for you because, like I said, you have to pay yourself through the S corp, payroll, taxes, all those type of things. You got to pay yourself a salary. Probably doesn't make sense, and I don't know that you're going to see a huge difference. If anything, you're probably going to spend more to do all that. Hopefully that helps you answer your question. Next question, can you open a business bank account without an LLC? Yes, absolutely. So you can set up a business as a sole proprietor, and you can go to the IRS. You can get a separate tax ID number for your business as a sole proprietor and use that separate tax ID number to open up the business bank account. And then as you're receiving money from people, you're just going to, they're going to ask you for a W-9, which is basically the form you fill out to send to the person that's paying you money that will allow them to issue you a 1099 at the end of the year. And if all that's through your EIN number as a sole proprietor, that's totally fine. A lot of people do it that way. And so, yeah, you can open up a business bank account with an LLC. Just remember, the whole benefit of forming an LLC in the first place is because an LLC is going to give you that limited liability protection. So if you're running a business that's high risk, you're selling consumables to people, maybe children's products, or you're giving advice of some sort, financial, legal, tax, health, fitness advice, something like that, then maybe it makes sense to have an LLC. But, if you're low risk and, maybe this is a side hustle for you or something, and you just want to have a separate bank account to put that income in, yeah, I think you can do that without an LLC. Last question here. I appreciate your good work. However, these questions still bother me. All right, let's see what you got. Number one, there's 3 subparts to this question, so just be aware of that. I'm just going to go through them one at a time. If someone is the primary resident of Maryland and wants to get an LLC registered in Delaware, is it illegal or against the state law not to register it as a foreign entity in Maryland? I'm not licensed to practice law in Maryland, so I don't know what the rules in Maryland are. What I will say is typically, number one, I don't know why you're registering your LLC in Delaware. There's really no reason to set up an LLC in Delaware unless you are a business, unless number one, you live in Delaware, or your business is located in Delaware, or you're trying to set up a larger corporation or some sort of entity that you're looking to get funding from people in the future, and you want to make sure that that's in place properly, and you want to have that business set up in Delaware. If you're a startup and you're looking for funding and venture capital and things like that, Delaware might be a good place to do that. But even if you do that, typically you are going to also need to set up a foreign entity in the state where you live and operate the business. So if that's Maryland, then you're going to need to do it there too. So I don't know that it makes sense for a lot of people. I'd say for 99% of small businesses that are not seeking funding or any type of venture capital or anything like that. Setting up that business in the state where they reside and do business is going to be the best option if that's something you decide you want to do. So for this individual, is it illegal or against state law to not register as a foreign entity in Maryland? It might be. I don't know. You'd have to check with Maryland. Bottom line, why not just set it up in Maryland to begin with? Make it easy on yourself, and then you don't have to worry about these issues. The second part of this question is how the LLC and personal income from that LLC be taxed. So typically an LLC is what's considered, an LLC, you can elect to be taxed however you want. So you can elect to be, the default is sole proprietor, which means that all that income and the expenses from the LLC are going to be listed on Schedule C of your personal tax return. Totally fine. And you're going to pay self-employment taxes on the net profit of the business, and then you'll pay federal taxes on whatever income flows through to your 1040 from that Schedule C. So that's how that would typically work. You can also set up your LLC to be an S corporation or even a C corporation. For an S corporation, then that basically means you have to pay yourself a salary, which means you're going to have to hire a payroll service or an accountant to run payroll for you and make sure the taxes get submitted to the right agencies. Personally, I use a service called Gusto, which I love. I've been with them for, 10 years now probably, and I'll include a link down below to get signed up with them. I think they give you, your first couple payrolls are free if you sign up using my link. Something like that. I'm not sure what the deal is exactly. So I think that's the better way to do it. So basically, the income is going to flow through to your personal tax return, and then you'll pay your federal taxes there. I do recommend, if you are setting up a sole proprietor and you're not running payroll, to send in estimated tax payments every quarter. That's going to make it a lot easier for you, and then you're not going to have to worry about getting a huge tax bill at the end of the year. And then the third part is how to avoid double taxation. So basically what double taxation is that's where the income from the business pays taxes, and then they submit dividends to you, and then you pay taxes on the dividends. So this is money that's already been taxed once at the corporate level, and then you're paying taxes on the income you receive through dividends as well. To avoid that, it's fairly simple. Just don't form a C corporation. So when you set up your LLC and you can elect how you want to be taxed, if that's what you decide to do, don't set it up as a C corporation. A C corporation is where you're going to run into those double taxation issues. An S corporation, which again is a tax status, it's not an actual corporate entity. An S corporation or a sole proprietorship or a partnership, it's just going to be flow through taxes. It's going to be your income is going to flow through to your tax return, and that's where you're going to pay the taxes. If you like these, let me know. Leave a comment down below. Give me a thumbs up. Make sure you subscribe to get notified when I post new videos, and hopefully this is helpful. If it is, let me know. I'd love to hear from you. Thanks so much, folks. Look forward to talking to you in the next video. Take care. Bye-bye.